It's about that time of day again. My name is Joseph. Thursday evening, October 18th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, we have crude oil. Oil is bearish with a trading range tonight, so I'm looking for selling opportunities up at the high of that range. And I got my eyes on a key resistance trend line for those selling opportunities tomorrow morning. The S&P is bearish with a hidden channel pattern tonight. So, of course, I'm looking for selling opportunities, and I'm focused on traps and buyer failures up around the highs of that channel tomorrow. Nasdaq is also bearish, but it has a spike and range pattern on the chart tonight. So I'm looking for selling opportunities with buyer failures, and, of course, we're watching those range expansion levels on the Nasdaq. Got a great chart for you guys on the NQ tonight. Stay tuned for more on that. How about some gold? Gold is bullish with a trading range tonight, and that tells me to look for buying opportunities using seller failures below the range tomorrow morning. The euro is also bearish with a spike in channel pattern tonight, and that tells me to look for relatively deep correction off the low before using that two-try failure pattern to sell back down to low for Friday morning. Well, speaking of Friday, we're ready to wrap up what's been an amazing week in the markets. We got some big news tomorrow morning, some big moves on the chart today, and that's setting up for some big opportunities to finish up this week on Friday morning. I've got a great plan for you, and we're going to break the plan down in just a few seconds. Before we get started, though, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of that YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember you can post them in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do so, hit that bell icon so you get notified every time I post another video. And if your goal is to become a consistently profitable trader, don't forget you can kickstart the transformation to becoming a professional trader by joining our mailing list. I'll send you an email every time we publish something new here at School of Trade. And don't forget, all the charts from tonight's video, you can download those, have them ready on your computer for tomorrow. If you're on our blog here at Sideways Markets, it's right below the video. There's a button that will give you the ability to download all of those charts. If you're on the YouTube channel right now, grab that link in the description of the video. And don't forget, if you have any questions, you can always call us toll free. We always have live support standing by to answer all your questions as well. Hope you guys had a great Thursday out there. Had a great day today as well. Hope you guys did as well. But you know what I always say, we're only as good as our next trading opportunity. So let's get ready for tomorrow. Tomorrow's Friday, October the 19th. What do we have next? Big news tomorrow morning. Big news tomorrow morning. We get the existing home sales number tomorrow morning at 10 a.m. Eastern Time. Now remember, whenever we have major news at 10 a.m., we call this the 10 o'clock shock, right? An electric time of the morning. So we get a great opportunity tomorrow. The day starts off in our trade room at 8 o'clock Eastern Time. And then, of course, we get through the opening bell at 9:30. And then looking forward to some fireworks tomorrow at 10 a.m. Eastern Time. So really excited about tomorrow morning's trading opportunities. So keep your eyes on that time. What we call that 10 o'clock shock. It's also important, remember tomorrow, it's a Friday, right? Fridays are always early in, early out, right? My rule is always, right, you got to have a good reason to be trading after 11 a.m. Eastern Time on Friday. You're more than welcome to hold positions into the close. I wouldn't necessarily recommend holding positions over the weekend these days, not as day traders at least, right? Make sure you know what you're doing before you do that. But the bottom line is on a Friday morning, you got to have a really good reason to be getting into new positions, taking on new risk after 11 o'clock Eastern Time. Let's put it this way. The price action doesn't usually get better or more reliable. That's always the key term, right? It's all about reliability, and reliability definitely drops like a rock after 11 o'clock on a Friday. So get to those trades early, right? Get to those trades early. Again, 11 o'clock Eastern Time, right, is always going to be my cutoff on a Friday. All right, that's the plan for tomorrow. Don't forget, 10 o'clock shock. Looking forward to some fireworks there at 10 a.m. Eastern time. Now, let's grab some charts here. Get ready for tomorrow morning's session. Don't forget, we open up our trade room 8 o'clock Eastern time. Right now, crude oil, S&P, Nasdaq, gold, and don't forget about that euro. Get a great chart tonight. Lots of great charts here tonight. Lots of great learning and earning opportunities setting up for Friday's session. Let's start with crude oil, though, first. Crude is bearish with a spike in range, resistance trend line, a measured move, and a hidden channel on the chart this evening. Now, we have a lot of possibilities on this chart tonight, but let's be very, very clear. The only thing we really know for certain right now is the bears have control, and we finish the day with a double bottom. Now, anytime a bear market has a double bottom, what does that tell us? It's a range, right? So we go down, double bottom, right? It's a range. We have ourselves a range-bound market with a bear bias. Now, whenever I have a trading range, I always want to make sure I identify the bias, right? We're bearish. I want to take that trading range. I want to copy and paste down, right? That creates support. Copy and paste up. That creates resistance, right? And the plan is pretty simple. When the market's bearish into a trading range, I want to sell high, right? I want to sell high. And to do that, we want to use what we call the two-try failure pattern, right? Which looks like this, right? One try, two try, and then back down in. You can see variations of that right here. One try, two try, and then back down in, right? Sometimes they're very small, right? Sometimes they're rather large, like we saw today on the gold. So the plan is pretty simple. We want to sell high up above or around the high, right, of that range using that two-try failure pattern. So knowing this, we're bearish. Where can I find some levels of resistance? Well, we know we have the top of that range. That's resistance. We know we have this 48 swing. We know we have the 69 swing, right? We know we have the range expansion, right? All of these levels are going to be areas of resistance. But let's not forget about this little gem, right? That's a great looking resistance line as well. And that really would be nice, right? If we could get back up and then use that resistance trend line tomorrow morning for our two-try sell. So that's definitely on my radar right here for tomorrow is that two-try pattern, right? That two-try failure pattern off those highs. Now, if we go lower, right? If we go lower, if for some reason I'm wrong about this being a range, if we do go lower, right, where might we be heading to? Well, we have this measured move, right? One leg down, two legs down. So I have a feeling the next objective for the bears, if we have another push lower, will be to get down to that 68 area, 67.98, right? Is that measured move? And you can see here, I'm also connecting these highs, bringing it down to these lows, and it looks like again, if we go lower here, we'd like to see right that rotation down to those lows. Now, if we go lower, this is going to be a bit tricky because we don't want to sell down here, right? I don't want to sell down here, and I definitely don't want to try selling a breakout of this range. So if we do end up going lower, then the plan turns a little bit different, trying to sell later in the session off the top of that channel, right? So these are the two main kind of components on this chart here for tonight. So let's dig our heels in, roll those sleeves up. Hope you stretched. Hope you brought a water bottle with you here tonight. We've got a lot to cover here tonight. So first things first here, let's plan the range. Right? Let's plan the range. There are basically two ways to do this. One is we go up, one try, two try, back down for a sell. Or two, we go down and we use that hidden channel pullback for the buy, right? Now, if you watch this newsletter every evening, you probably have seen a lot of this stuff this week because we've had a lot of ranges we've talked about, right? So a lot of this will be a refresher for you if you've already been here with me here this week. But if you're brand new here, though, here's what you want to expect, right? First, we'd love to get this rotation back up to the high of this range. Now, once we go higher here, the market's going to feel very bullish. But the big picture is not bullish. Momentum is not bullish, but we're going to notice it's going to feel really bullish. And that moving average will come around, and those buyers will try to buy that pullback, right? Just like they did back here. It went up, buyers try to buy the pullback. You can see the green candle right there. Buyers try to buy the pullback there. So we're expecting to see something similar to that, right, up around the high of this range. Now, what I'm going to look for is I'm going to look closely once those buyers come in off the moving average. I'm going to look for an area where I can sell into the stop losses of those buyers. Now think about this. We're at the high of the range, so we got lots of sellers that want to sell up here. And then if we can get the buyers to get stopped out of this, right? If we can get these buyers to get stopped out, we can actually sell right into those stops, right? And we can get those buyers now becoming sellers, right? Because not only will the sellers be selling off the high, but think about it. The buyers who are long, when they get stopped out, how do they get out of their long positions? They have to sell their way out of those long positions. So that's definitely something that we're looking for here tomorrow. And again, I'd love to be able to use that trend line up there, right, as a level of resistance. So this is definitely a hot spot for me. This is definitely someplace, right, this is definitely where I'm watching right here for tomorrow. Now remember, right, if we do happen to see that, right, that jump off the moving average, right, what do we call this? We call this a 1, 2, 3 reversal. Right? Remember this, again, if you're brand new, you don't know this yet, right? But what does it take for a market to reverse? Well, let's imagine now earlier with that strong move up, the pullback to the moving average. Let's say they held that pullback and ran higher. That is a 1, 2, 3 reversal, right? It's basically a strong move against the trend, a pullback to the moving average, right? And then a strong move off that moving average. Simple enough, right? Yeah, pretty easy. Now, the plan is, again, if we go back to this high now, we get the moving average coming up. The buyers now buy the pullback, but instead of rolling over and giving us a sell, now they jump off the moving average. Now what do? Do we chase after it? Do we start buying? No. We mark up this prior swing high. That becomes support. We mark up these highs. This will create a channel. And now we have this sweet spot right between the low of that new channel, right, and that little prior swing high. Now all we got to do is wait for that pullback, and we'll find our entry from there. Okay, we call that a 1, 2, 3 reversal into a hidden channel pullback. Okay, very, very common pattern when the markets reverse. Okay, now there may also be a move again, right, as we go rolling around this range. Another thing we want to look at is a possible move back down. Now, I got to be careful down here, right? I don't want to sell below the range low, and I don't want to sell into this measured move. So if we don't see this, again, at this point, let's ignore that channel, right? Let's ignore that channel. Let's ignore this, right? And let's ignore that. Okay, at this point, all we have now is this range. Okay, now we're looking for rotation, right? We get it up, 1 try, 2 try, back down. What do we do when we get back down here again, right? We go up, 1 try, 2 try, back down. We talked about that. Now we're back down to that low. Now what do? We do not sell, right? We don't want to sell low. We want to sell high, right? But how would you buy this? You know, because we might see a great opportunity here, right? Because of this kind of potential for this being a channel here, we might get a good chance here to be a buyer off these low. What would that pattern look like? It would look like this. What's going to happen is that moving average will come over. We're going to see that 2 try failure, but that's not a very reliable buy because it's not a bull market, right? So you don't want to take seller failures for a buy in a bear market. You want to wait for it now to pop back up. Now we're going to grab that swing high, find that new channel, and you guessed it. Look to buy, right, that hidden channel pullback. Okay, so that hidden channel pullback, that'll be our best bet. Again, because that overall momentum is bearish, we've got to be a little bit more conservative. As I always say, trade profitability for probability, right? Let's take a little bit less profitable trade, right, but a lot more probable by waiting for that move up and then buy that pullback right off of that low. So a very, very easy pattern there. Just got to wait for it as we go lower. So those are the 3 basic scenarios looking for here in this range. One is a 1 try, 2 try back down. The other will be a 1 try, 2 try reversal, right? 1, 2, 3 reversal. Find that new channel. Draw off the low, off the high. Find that new, right? Find the new channel. We're buying off that low. The next would be a 1 try, 2 try. Nah, you can't buy this, but you can look now for that, right, for that hidden channel, and we're buying right off that hidden channel low. Perfect. Now, always want to be ready for anything, right? We always want to be ready for anything. So now, let's say, what if I'm wrong, right? What if we just run lower here, right? What if we run lower here? If we run lower here at this point, I'm going to start watching this to turn into a hidden channel, right? So 1 leg, 2 leg, and at that point, we'll start looking for those selling opportunities up off of that high. Now, the way that will likely set up is we're likely going to see this market very similar to what happened here. 1 try, 2 try, hidden channel pullback, back down. We go lower, we go higher. 1 try, 2 try, hidden channel pullback, right, and back down. I'm not making this stuff up, right? You can see these patterns. In hindsight, you can see them. 1 try, 2 try, down. There's your failure, hidden channel, pull back and back over, right? We go down, then back up. 1 try, 2 try, failure, right? Hidden channel, pull back and back over. Simple patterns, just got to learn them, right? Now, speaking of learning patterns, you want to learn more? I got to keep going right now. I got to go the S&P. We got up next, Nasdaq, gold, euro. I don't want to be here all night, right? We got some more baseball to watch tonight, right? Thank goodness. So I want to make sure I give you as much value as I possibly can. I can't do it all in this free newsletter video, but here's what I will do, right? I'm going to put a free trading course in the upper right-hand corner. I'm also going to link this up in the description of the YouTube video, and it's right below the video in a big red button on our blog at Sideways Markets. If you want to learn more about those 2 try failures, about those hidden channel pullbacks, about those 1, 2, 3 reversals, right, and everything in between, right? If you're serious about your trading success, you'd be a fool not to take me up on this offer, right? It's priced right at free $99, right? No better price than that. So grab that free course in the upper right-hand corner, right? Dig into that, and I'll see you on that video series as part of that free trading course. In the meantime, we got to keep moving. Right, we're going to keep moving. Let's keep going. We got some S&P to cover here now. S&P and the Nasdaq are relatively similar tonight, right, like usual. The S&P is bearish with a spike in range, hidden channel, and a support trend line on the chart this evening. The bears clearly have momentum, right? No doubt about that. So my plan in a bear market is to look for selling opportunities at resistance levels tomorrow morning. Right now, with the day ending in a range, kind of a sloppy, choppy type of range there, with the day ending in a range, you can call it a triangle if you want. I'm calling it a range right now, right? I can use the range expansion, take that range, copy and paste it up, expansion, copy and paste it down, expansion, right? See, it's just a 1 to 1 to 1, right? These are all the same, 1, 1, 1, right? I know our eyes play tricks on us sometimes, right? But that's the range, okay? So take it up. There's my range high. That's resistance on the range, right? Down low, that's support on the range, okay? So where can I find resistance? I can find resistance at the top of that range expansion, right? Now, look what else we have here. Right? This is setting up for, I talked about the Elliott wave pattern last week? I think the title of the newsletter was Fifth Wave Strategy, right? You can see more of that on my YouTube channel. We get this nice strong move down, right? Setting up for that Elliott wave setup. I'm connecting these lows up to these highs, and right there, right? That will be a key level of resistance as well. So you know me, I love me some hidden channels, right? And that hidden channel is definitely on our radar. So we have the range expansion level along with that hidden channel high, and boy, is that giving me the warm fuzzies, right? That makes me excited about getting a potential selling opportunity. Now, remind me again, we just talked about this on crude oil, but I forgot. What's the best pattern we like to use for a range? What was it again? Oh yeah, 2 try failure, right? You mean like this one right here? 1 try, 2 try failure, right? Oh no, maybe it was the 2 try into hidden channel. Maybe that's what it was. I'm kidding with you, right? But you can see two examples right there, right? Strong move down into a range, one try, two try, back down, right? Look what happens down here. One try, two try. Again, you can't really buy that. What you can do though is mark it up, pull back, and go, right? See how cool that is? It works really well. Really great patterns. So when we have a range and I want to sell, what do? We look for that one try, two try, right? Up at resistance. Find that resistance. There's my resistance. There's my resistance. Good stuff there, right? Up, one try. Pull back to the moving average. Two tries. Sell back down. Okay? That's what we're looking for. Now, probably not going to be able to get that. Probably not going to get that hidden channel failure, the hidden channel pullback pattern, because look what we've got here. Trend line. Now, this trend line is going to keep those sellers up tonight, right? They're probably going to lose sleep over this. This trend line, it may look very, very, very innocent right now, but make no mistake, right? And I'm sure a lot of you guys will be saying, no, it's a flag. It could be a flag. It definitely could be a flag. This could be a bear flag, right? If it is a flag, it's the same basic plan. Okay, so if you see this as a flag, fine. I call it a range. I think this range back here gives it away personally, right? I think this range right here, range expansion up, expansion down, it just fits so well, right? It just fits too well. So I think this is a range. I don't think it's a flag, but you could see it as a flag though, just to kind of anticipate those angry YouTube comments, right? What do you mean it's not a flag? Why do you see a flag? Right? It could be a flag. It definitely could be. The bottom line though is this trend line. Right? This trend line is probably going to be in the heads of those bears tomorrow. And what I mean by that is when you have these trend lines like this, right, you really got to be thinking, I have to either get high enough away from this thing to make it worth my time, right? Because nobody wants to sell here, right? If we go like right here, one try, two try, ooh, yeah, I can't wait, right? Give me my 3 ticks, right? That's not enough, right? That's not enough to get people excited. Professional traders are not going to get out of bed, right, for a point on the S&P, right? They're going to want more than that. So they're going to want to get a little bit higher, right? They're going to want this thing to go up, up, and then down, right? One try, two try, one try, two try, and then down. So really, we've really got to get some altitude here if we're going to basically free up some space, right? It's this area right there, right? That's the profit that those buyers, the sellers, they're going to go, it's a simple math equation, right? Is this amount of risk worth that amount of reward? Simple as that, right? So when we see this thing going higher here, one try, two try, if we can get a decent risk to reward, makes sense, right? Think about it. People, these are human beings trading this, and they're really smart human beings, right? They're smarter than I am. They calculate probabilities. They calculate risk-reward ratio. You got to be thinking risk-reward on this, right? If we jump up and this trend line's staring us right in the kissa, right, and it's just sitting right there going, sure, sell, go for it, right? You're going to lose money that way. It'll kick back in reverse, okay? So the one thing is, can we go up, one try, two try, back down before we get there, or this might be a really nasty session tomorrow for a little while. Until what? Until we can until we can use it on the opposite side, right? So those are the two scenarios. I would imagine it's either going to be early or late for the best opportunity. Either early, one try, two try, back down, right? Again, it's up, back down, right? Have enough room to sell down to that trend line, or we've got to use this trend line now, not as support, but now as resistance, right? We chop around, we chop around, we chop around, then we go 1, 2, right? And we use it as resistance. Problem solved, right? That happens quite a bit. A lot of times if we can't get our money out of it before we hit back down, if it just kind of sits there, it'll probably sink back down, wait, and then we'll sell it later on in the session. Okay, so the most important thing right now is we're bearish. I want to go up, one try, two try, back down. Hopefully we get that pattern. If we go lower, be very careful, right? Be very careful as we go lower. You can see that range. We already got that range expansion. They held it once, right, on both sides. So if we go lower, remember, it's one try, it's two try, and then it's what? It's hidden channel pullback, right, going back up to retest that high, right? So I will take a nibble to the upside. I will take a nibble to the upside there, but it's got to be the right pattern, right? Now, how do we turn bullish? We know that already, right? Strength, pullback, strength, okay? And make no mistake about this, because of this trend line, this could easily, like I said, this trend line is going to be the nightmare for these bears tomorrow if they're not paying attention. We could easily see this thing try once, try twice, and then jump, right? If that happens, you know the drill, right? Mark up that high, mark up those highs, find the channel, right? There's your sweet spot right there. Oh, sorry, right? And we're looking to buy that pullback. And the target at that point now is a big retest of that 28.20, right, tomorrow morning. Remember, you've got to see strength, though, before we reverse, right? Just seeing it go one try, two tries is not enough. Okay, believe me, I wish it was that easy. I wish it was just, oh, two tries, buy it. We're not bullish. We're still bearish. For all we know, it's going to go three tries and then come back down, right? What you want to wait for is it's nice, bam, right? Big break. Now, find that new channel, right? And now we can buy it. Now we can buy it, right? The hidden channel pullback. All right, guys. So that's the reversal there. Tomorrow is a Friday, right? So anything's possible. If we sit in the middle, stay away from the middle, right? Sell high, buy low. There is possibility here that this may not be the right channel. It may be a steeper channel like this, right? That's a possibility. So if we do end up running lower, right? If we really end up running lower here, I'll follow it. We just have to see this market get through this low and really push, right? So we got to get through this prior low. We've got proof there around that range expansion. We got to get through it, right? Through it, get that moving average through it, and then we can start looking for sells, right? Going from there, right? And we'll probably end up using this big measured move for our big targets. We'll know more once we get there tomorrow. But that's the basic plan, though, right? Be very careful selling as price goes lower. Right? Be very careful selling as it goes lower. Just make sure it gets through, it clears through that low. Because if not, it'll go down once, it'll pull back, and we'll shoot back up. And again, we'll be looking for a buy there as it tries to do so. All right, looking good. Let's grab some Nasdaq. Nasdaq is a little bit of a repeat. Right? Very similar on the Nasdaq, a little bit different you can see, but very, very similar. Nasdaq is bearish. We get a spike in range, a hidden channel, and a support trend line on the chart this evening. The bears had the momentum with a strong move lower, right? That move lower, that nice strong move lower finished with a trading range, right? We can easily see how that range now, right? I've marked up, there's my range. We mark up the resistance overhead. Oh, look where they went to. Yeah, the support below. Oh, look where they went to there. Yeah, everything lines up pretty well. I'm very confident that's going to be what most people see this as, right? Will be as a range, right? So we get a bear bias. We get a bear bias with a trading range. What are we doing with it, right? Bear bias with a range. What are we doing? Yeah, you got it. One try, two try. Look for that move back down. We still have that same problem here with that trend line. Right? So it's either going to be, it's basically early or it'll be late, right? One try, two try early. That way we're not selling directly into it, or it'll have to be late where we're going sideways, right? Maybe we go up, we chop around a little bit, and then later in the morning, right, we get that two try rule and we can sell right back down again. All right? And remember, right, if we're sitting in the middle, stay away from that middle. Right? Stay away from that middle. Buy low, sell high, and avoid that middle. So we have pretty much the same thing, right? We got that channel acts as resistance, right? We've got the range expansion. That's going to act as resistance. I've got that beautiful reversal line up there at 10.25. That's going to be resistance. So, hopefully we get a strong move up. The buyers should buy the pullback, right? We get that failure, we can sell it back down again. That would be ideal. Right, those two try patterns are so great. They're great patterns. And again, don't forget, right? You can learn like literally. I've got hundreds of examples of these two try patterns. You can find that information link for our free course in the upper right hand corner, or it's in the video description on YouTube. It's also below the video on the blog as well. So up, one try, two try, back down, or chopping around right in the middle there. 1, 2, right, using that trend line as resistance. As we go lower, right, as we go lower, one try, two try, don't chase after it, buy that hidden channel pullback. Or, right, if we go lower, remember the key here is going to be, if this thing goes lower, let's add that midpoint to the channel. If we go lower here, right, if we just collapse lower, you'll probably end up using the top or the kind of the midline, right? See how these wide channels, you know, I always remind you guys that channels, there are so many variations, right, of these channels. They're like, you know, they're like birds, right? There's like a million different type of birds, right? There's a million different channels. You've got, you know, narrow channels, wide channels, very strong channels, weak channels, steep, flat channels. And all of these channels have different personalities. When you have a wide channel like this, right? This is a really wide channel in my book. You can add that midline to it. And you'll notice, right, it'll act as support and resistance. You wouldn't, you know, don't waste your time if the channel is really narrow. Don't waste your time with the midline there, because nobody's going to use that, right? But if that channel is really wide, right, like that, oh yeah, stick that midline on there, right? And then you can use that. If I can get my drawing tools here, you'll notice it will act a lot of times like its own like sub-channel, right? And so we're looking for that tomorrow, right, if we go lower. So if we go lower, mark up that midline, right, wide channel. If it goes lower here, yeah, let's use that. Let's use that. And we're looking for sells, right, off of that, right, off of the, again, kind of the combination there of that midline with that 7,100 or so, right, as it goes lower. So that'll be an easy way. You know, obviously though, again, you don't want to try selling it as it goes lower though, right? Because you've got that range expansion down there. You want to be careful, because we're going to be looking to be a buyer off that low with the right pattern, right? Not the two-try failure, but with that hidden channel pullback pattern, right? If it can go through that low now on strength, I know, it's never fun to watch the market go without you. But this again is where I remind you, right? What's more important, some profit now or more probable trades in the long run? It's much more important for you to increase your probabilities, right? When you trade with a higher winning percentage, what you're going to get when you wait for that move lower, then come out, get that moving average down, and then we can go selling off that low. That'll be a whole lot more of a higher winning percentage. And when you have a higher winning percentage, right, in your trading, in your week, you're more confident, you're more engaged, it's just more enjoyable. I mean, I swear, right, the grindy, you know, types of forcing trades, it takes your money, and it's just so much stress, right, of trying to trade that way. So rather than trying to force trades and kind of grinding out every tick of the market, I've learned over the past 10 years of teaching and trading, the best way to do it is let the thing go. Let it go, right? You know people aren't going to sell it forever. It's going to eventually come back, and when it comes back, you get a whole lot more profit to be made now. It'll be a whole lot less stress. There won't be as much grinding, right, and you know, biting, you know, on the edge of your seat, right, banging your keyboard against the wall, right. It'll be a lot easier, right. I've been in your shoes before. You know, I remember how it went. I never want to miss trades, but you know, there are times when, like any business owner, right, it doesn't matter what business you're in, right. If you take every single opportunity you're in, right. Let's say I was in real estate. What if I bought every house I saw? I'd be broke. Right? Or maybe you're a contractor or a construction worker, right? What if you took every job that you bid? Right? You can't do it. You have to be selective with which jobs you take. It doesn't matter what you do, but if you say yes to everything, you're going to be exhausted, you'll be dead broke, right? And you're not going to do a very good job. Better to know what the best opportunities look like. And this is an example of that, right? We're bearish, so we want to wait for that strong move through. Use that, right? Use it. Again, I like to use the midline of those wider channels, and let's go selling right off of that high. And it will probably end up being another one of those two-try failures. It'll probably go down, up, one try, two try, right? It'll probably look like that, right? Like this, right there, right? Good example there. All right, so that's the plan if it goes lower, right? Use the underbelly or use the midline, right? Combine with the underbelly of that range, right? And that will be our spot to look for that sell. All right, guys. Again, 1, 2, 3 reversal. Mark that swing. Find that channel. Buy that pullback. Right? Buy that pullback. That's pretty easy, right? It's pretty simple. Let's see here. What else we got? Yeah. So 1 try, 2 try, back down, channel or range. 1, 2. Later in the session, use that trend line. Yeah, that covers all of it, I think, guys. That was good. Let's keep moving. So very, very similar to the S&P. Stay away from that middle. Buy low, sell high, right? Let's keep cranking. Let's keep going. How about some gold? How about some gold? How about those nested ranges? Yeah, now we're talking, right? What a great example of that range inside of a range. It reminds me of, what were those little dolls called? You guys remember those little dolls? Remember those little dolls? I can't even, gosh. They're still around. What were they? Those little dolls? They're like little porcelain dolls, right? And it's a horrible drawing, right? And inside of the one doll will be a smaller doll. You know what I mean, right? Inside of that one will be a smaller doll, right? What's that? That doesn't do me any justice. What are those called, right? I don't know. Anyways, kind of remind me of that, right? Anyways, so we've got the back in the gold here, off track here. You see what happens when you get me off the rails here, right? You got to bring me back in here. Gold is bullish. Got a trading range, support trend line, right, on the chart this evening. I'm still thinking about those dolls right now. If you know the answer to that, right, give me a comment in the comment section below. What is the name of those? They're like porcelain or cardboard, but they're like ornamental, right? They got a lot of painting on them. They're beautiful dolls, and they go inside of each other, right? The doll inside of the doll inside of the doll. Anyways, okay. Gold is bullish, trading range, support trend line, just as expected, right? We got that 1 try, 2 try for the sellers, right? And again, remember, this was also the 1 try, 2 try for the sellers, right? That nested range, right, that we talked about from last night's newsletter. So we anticipated this, right? 1 try, 2 try, back up. 1 try, 2 try, back up. If you missed last night's newsletter, not to worry. Just scroll down on my blog. It's the next video right in line. If you're on the YouTube channel, it's the next video in line on this playlist, and it will make a lot more sense there for you. We have this larger range, and so now here we are going back into that range right from last night. So here we go. We got this range now going higher. The bulls clearly have the momentum right now, but they won't be too keen on buying into these highs, are they? No. Professionals don't become professionals by buying into highs, right? So that tells me the buyers aren't going to want to buy high. They're going to want to what? They're going to want to buy at support, right? And what do we look for when we have a bull market in a range? What's the plan? 2 try. You got it. 1 try, 2 try, back up. And I know I sound like a broken record right now, but we just happen to have a lot of ranges right now. It's just the way these markets are going. But 2 try patterns are very, very reliable patterns. They're very common, and they work in a lot of different situations. So I do talk about them quite a bit here, and you can learn a lot more about them inside that free trading class. So the bulls have control, right? We've got falling resistance here coming over. We talked about that last night, right? Right to that target, beautiful target for the bulls today. We don't want to buy into that. Right, we don't want to buy into that. I think the biggest clue right now, though, is this range. Right, there's your range. So really, at this point now, it's let's get as low as we can get. Right, as low as we can get. 1 try, 2 try, back up. So as I look at this now, again, keep in mind this is your resistance line coming down. Right, so as I look at this right now, we got that 1 leg, we got that 2 leg. We're pulling back. This could easily set up right now, 1 try, 2 try, back up, right? And this could also easily set up for a hidden channel pullback pattern too. So 1 try, 2 try, right? We know where those bears are stopped out, right? So what we're doing is we're basically buying into the stops of those sellers, right? The bears tried once, the bears tried twice. Okay, and again, we've seen a lot of examples of this, right? We saw 1 try, 2 try there, right? We saw, and again, as we talked about last night, the mark came back down. We saw it here. We saw it here again. Lots of examples of that we found today in the trade room. So the bottom line is, right, we want to be buying into those stops. Okay, 2 try failure, 1 try, 2 try. And then if we can get it, again, we don't want to be buying into that trend line up here, but if we can get it, grab that trend line, find that channel, right? And we're buying off the low. You just, right now though, the word of the day tomorrow is low, right? Low as possible, because remember we talked about that support trend line, going to be the nightmare for the bears and the E-minis. Yeah, well, this resistance trend line is going to be the nightmare for the bulls, right? They want to go back up. The bulls want to go back up and retest that high here. They got some good momentum going higher, right? But we're going to have to get a deep pullback, get below that moving average, down to support levels, right? Like this triangle we found earlier this week. 1 try, 2 try, and back up, right? Look for those bears try once, look for them to try twice, then we know we got them what we want, right? And we can buy into their failure, right? Now, in all honesty, I hope they pull back even further, right? My ultimate goal would be we get another leg lower here, get this trend line coming down. See, you know what I'm going to say, right? Yep. Use that trend line now as support. You're paying attention. Good. That tells me you're following along here every evening, right? That would be really nice, because then, right, look at all this cheese, right, waiting for those buyers up there, right? The bulls like the cheese, don't they? They do, right? Look at all that, whatever you want to call it, whatever bulls are attracted to, right? Red, right? Look at all that opportunity above now, right? So, you think about it, what would you rather do? Would you rather buy here, right, where there's your, don't get me wrong, that's a valid pattern too, right? But I'd much rather see us 1, 2, grab that trend line down, now use that trend line, and what usually will happen is we'll usually see it pull back to the moving average right here too. And so you've got kind of this combination, right, where it's a 2 try into that trend line. If you can get the buy off the trend line, take it off the trend line. If you don't get the pull back off the trend line, you still have that 1 try, 2 try failure pattern to go right back up again, right? Good example back here. We had that trend line coming down, right? It didn't really get back to hit that trend line there, right? But it's okay, because when it goes back to the moving average, you got that failure, and then you've got that hidden channel pullback, right? So those patterns will happen nicely here. So 1 try, 2 try back up, or deeper pullback, right? Deeper pullback, get above that trend line, back up we go, and again, this will be same basic pattern here. 2 try failure, don't chase, and then hidden channel pullback. All right? Now, guys, I know what you're thinking. There's a lot to comprehend on this right now. If you're here for the first time, I know a lot of this might be complicated. That's okay, though. That's why I have that free trading class, right? Because that will simplify all of this down to the most important fundamentals. And again, you can grab it in the description, right, of this video. All right, I think the big killer for tomorrow is going to be if we don't get much movement, right? If we sit right in the middle of this range. If we sit right in the middle, again, you don't want to buy high here right now. You want to keep your eyes open for 1 try, 2 try, back up again, right? So if we do sit in the middle, wait for that 1 try, 2 try, right? Don't take the bait. If we do look like this tomorrow, right, we go up, kind of sit in the middle like this, right? Don't take the bait, wait for it, 1 try, 2 try, and then back up. And then what would it take to be a buyer through the highs? What would it take to be a buyer through the highs? It would take quite a bit of strength, right? Strong move through, moving average up. And I'll definitely look for it, right, for that buy off of these highs. But keep in mind, though, it's going to be really strong with the high. It's going to really be strong. This punch higher here, right, needs to be like, whoa, right? It needs to be like that. Right? We're going to have to see it go, wham, big move up. There will have to be enough momentum going through these highs so that buyers simply can't resist the temptation and they come back to buy the pullback, right? Got to have enough punch through those highs to the point where you go, oh, the bulls are still running, and then we can buy that pullback. This is something you might want to come join me in the trade room, right, and really get a feel for those types of trades, because those are all about personality. Last but not least, have we reversal? 1, 2, 3, reversal, right? Don't even think about selling as the market goes lower, because you know what happens. Every time it goes lower right now, it keeps getting bought back up. So it's going to go lower. It's going to hold that pullback, right? And then run off that low. That'll give me my new channel, right? And again, you the drill, right? Sell off the high of that channel, right? Beautiful work this week on gold. Really good work this week on gold. Gold really performed well. I know. Looking at the chart, you're going, really? That's performing well? But it did. We had this range, right? It was one try, two try, back up. It went into a range on yesterday. Another one try, two try, back up. So everything's really worked well this week, right, on the gold. There's no reason to think tomorrow won't be different. You get the plan now, right? And again, I'll be here every step of the way as a client, right, if you want any more help. Let's wrap up tonight here on the euro. Euro is bearish with a spike in channel, a measured move, and a round number on the chart this evening. The bears have control, but they finished the session 3 legs lower and right on that 15,000 round number, which tells me that this market is most likely ready for some profit taking. The momentum is really bearish. So my plan is to look for selling opportunities up at resistance levels overhead, and I can see a reversal line and the high of a spike in channel that'll make for some excellent resistance levels overhead. So we can easily see the bears have it, right? They're very bearish right now. We have, right? They're so bearish right now, right? I'm kidding. 1, 2, right? 3. Right, that blue steel, man, he's so bearish right now. 1, 2, 3. We're 3 legs down. We're right at that. We're right at that round number. Right, we're right down at that round number. We talked about this last night. Right, that round number 15,000. I've said this before. I'll say it again. There's never any guarantees. Right, but usually when we go 3 legs down, that's usually enough for people to start thinking about taking some profit. Right, and usually that will result in either a trading range, which I think you guys are experts on ranges now, right? 1 try, 2 try, back down, right? Or, as you can see here, just a pullback, right? So mark up that low, up to these highs. That looks like a beautiful channel. We can sell off that high, right? Those are the 2 scenarios that will likely happen here. If I had to guess right now, I would guess we're going to probably go sideways. It's been a pretty big run here for the bears here. I would guess we'll look for it to go sideways. So look for this turn sideways in the euro. Again, maybe I'm wrong. Maybe it keeps going, but typically 3 legs down, maybe 4 legs down, right? We start seeing some significant profit taking. If we see it go sideways here tomorrow, you know the drill. Go looking for resistance, right? So resistance levels overhead. Take that range and copy it overhead as well. That will become resistance, right? I don't know where it'll be just yet, but I do know though that if we do go sideways, 1 try, 2 try, back down, right? 1 try, 2 try, and then back down to that range. Okay, so look for that pattern tomorrow if we go sideways. If we don't go sideways and we just come up, right, you're basically looking for the same pattern we talked about so many times already here. 1 try, 2 try, right? 1 try, 2 try, back down. 1 try, 2 try, back down. And these patterns happen over and over again. We'll go up above that moving average. Buyers try to buy the pullback. We'll look to sell, right, into those stops as we finish up that, right, that move lower. Where would the target be? Another measured move, right? So let's just say we go back to the high of that channel. Bing. Right? Back to the high of that channel. There's your target right there, right? You're using that measured move, right? Same symmetrical legs, right, as we go lower. But again, keep your eye out for both scenarios here. Look for the range. 1 try, 2 try, back down, right? Look for that channel failure, hidden channel, pull back down. These are the same patterns that we've talked about religiously here all video tonight, and of course, right, all week here this week. A reversal, right? A reversal. I would imagine a reversal is probably going to have to get through that high and use it, right? So get that moving average up, right? 1, 2, 3, reversal. Mark the swing, mark the channel, looking to buy the pullback, right? And we're back at that point. If we reverse at that point now, you're going back into that big range, right? There's that range around that, we'll say 16 and change, right? That will be the objective if we go back up, right, to retest those highs, or if we turn bullish tomorrow. If we keep going lower, right? If we keep going lower, we keep grinding lower. Not much changes. This wouldn't really be your typical, midline type of channel, It's not very wide, right? But if we were to keep going lower, you might see it use that midline. What I would do is mark up those swings, trap, failure, back down, right? Trap, 2-try failure, back down. And again, guys, I've got so many examples of trap patterns, 2-try failure patterns, hidden channels, spiking channels, all these great patterns as part of that free trading class. You will not be disappointed. So make sure you grab that, right, as well. All right, guys. Boy, great job. Great job this week. We've got a great plan for tomorrow. And again, as I said earlier, I know how it feels to get to your desk every morning and feel that sense of anxiety. Oh boy, how much am I going to lose today, right? What's going to go wrong today? What should I use? Which indicator of the week should I use this, right? That's not fun. It's not fun to know to not know what works and what the plan is, right, for the day. You really need a plan, and most importantly, you need someone in your corner that's going to walk you through each step of that plan. I use the analogy all the time, right? LeBron James has a coach, right? Tiger Woods has a coach. The best of the best in the world, they have a coach. It's not to show them how to play basketball or how to hit a golf ball. It's to help keep them in line between their ears, right? To inspire them, to provide, to help them with discipline, right? To give them structure and to give them that encouragement to keep on pushing through. That's what we do here at School of Trade. That's what we've done for tens of thousands of people here at School of Trade over the last 10 years, and I'd love the chance to do it with you as well. Call me toll free anytime. Grab that free trial. There's a free pass for our trade room on that free trial. Learn more about our beginner, intermediate, and advanced classes, right? Hit me up on live support. Grab the free trading course. Keep in touch. Right? I know those markets are complicated out there, but I've got a great plan, and we execute that plan together every day in our trade room, opening up at 8 o'clock Eastern Time. As always, my name is Joseph. Be well out there. Be nice to each other. Be here tomorrow. Actually, no newsletter tomorrow, right? The next newsletter will be next Monday afternoon. But don't be a stranger, right? I will answer that phone when you call. So don't be a stranger. Keep in touch. All right, guys? Be well out there. Be nice to each other. And be here tomorrow, guys. And go Red Sox. Go Red Sox. I'm telling you, Dodgers, Red Sox, World Series, I'm in trouble. I'm in big trouble. We'll talk more next week, though. All right? Good luck out there. Have a great weekend. We'll see you guys next time. Adios, amigos. Bye-bye.